The top business stories live from the Sky News City studio. The Competition and Markets Authority says pet owners could be paying too much for medicines or prescriptions. US inflation comes in higher than expected in February, dampening hopes of an early interest rate cut from the Federal Reserve. Plus, I'll be speaking to the man managing the wealth of the world's largest charitable foundation. Good afternoon. This is Business Live with me, Ian King. The Competition and Markets Authority is to launch a formal investigation into the UK's veterinary services sector after a review highlighted concerns that pet owners are not getting a good deal. The competition regulator, which began public and veterinary professionals, suggesting it was right to look into the issue. Well, among the CMA's concerns are that consumers may not have enough information, enabling them to choose the best veterinary practice or the right treatment for their needs, and that pet owners might be overpaying for medicines or prescriptions.
So we've seen a wide range of concerns, and if you think about access to information, making prices transparent and upfront, we've seen that 80% of the vet practices we looked at don't even publish basic price lists on their websites. For individual pet owners, when they're looking at treatment options, we're concerned that a lot of these large corporates have invested in sophisticated treatment options. Now, that brings many benefits, but it does mean that potentially pet owners are not being offered a full range of choice. They're not given access to some of the simpler, lower cost options that may better suit their needs.
UK earnings growth slowed during the 3 months to January, raising hopes that the Bank of England may soon be able to cut interest rates. The Office for National Statistics said average regular earnings, excluding bonuses, rose at an annual rate of 6.1% during the period. That was down from 6.2% during the final 3 months of 2023. Meanwhile, average regular earnings, including bonuses, rose by 5.6% year-on-year. That was down from 5.8% during the final 3 months of the year and was the slowest rate of growth since October 2022. The ONS also said the unemployment rate during the period rose from 3.9% from 3.8% during the final 3 months of 2023. Now, Novo Nordisk is one of the biggest business success stories of recent years. The world's biggest maker of insulin has become Europe's most valuable company amid investor excitement over its weight loss drug Wegovy. The Danish company's controlling shareholder is the Novo Nordisk Foundation, the world's biggest charitable foundation, whose assets are managed by the investment company Novo Holdings. Well, it today reported total income and investment returns of 31 billion Danish kroner, that's £3.6 billion for 2023, which was up from 3 billion kroner in 2022. Well, joining me now, I'm very pleased to say, is Kasim Kutay. He's the Chief Executive of Novo Holdings. Kasim, welcome to you.
Thank you. Good to be here, Ian.
The portfolio generated a return of 9.4% during the year. There was a lot of turnover. What were the sort of things that you were buying and selling?
Gosh, well, we were active across the board, I have to say. So 2023 was a year of high investment activity. I'd highlight our venture team in particular on the life science side. So as you may recall, and I think as we discussed last year, the venture bubble burst in 21. And we took advantage of that quite actively because we believe that the fundamental underlying science of a lot of these companies was very good. So we were very active buyers in the public markets and privately on the venture side. Other than that, I would say a fair amount of activity on the public equity side, on what we call the capital investors side of our business, the non-life science side as well.
Yeah, I mean, were there any big bets that paid off for you there in particular?
I would say it was pretty broad-based, actually. On the capital investment side, a very big year, very successful year on the bond side in what we call credit, which is high-yield bonds, which, as you know, is become a very, very hot area. It's an asset class that a lot of people are jumping into, so it's become quite competitive. I expect that returns are going to be more difficult to generate going forward, given that competition. But we moved early, and it served us extremely well in 23.
You mentioned just now your venture investment business. I mean, obviously, you've taken a lot of big bets in that field. What are the kind of themes that are underpinning what you're doing?
So, just broadly speaking and generally speaking, Ian, we are in a golden era of innovation in biotech. It's tremendous what we're seeing. And we believe that still has a long way to run. And a lot of it has to do with what's going on at the cell and gene therapy level. And of course, mRNA, which played a key role in the vaccines during COVID, is a very good example of that. So we're very heavily invested on the cell and gene therapy side. We think there's going to be some very exciting developments in the coming years on that front.
Obviously, it's quite a risky field. I mean, you are prepared to stomach losses.
Absolutely. Absolutely. Look, it's a risk business. It's a very high-risk business, and it's about having a critical mass portfolio-wise, a big enough portfolio where you can place a lot of bets, and all you need is one winner out of 10, and you do very well.
Yeah, you're kissing a lot of frogs.
You're kissing a lot of frogs.
Yeah. Now, obviously, everyone's very, very excited about Wegovy and obviously Ozempic as well, the diabetes treatment. How much extra cash is that going to send your way in coming years?
A lot. We expect that over the next, next 5 years, or let's say between now and 2030, our average investment, the amount that we're going to have to deploy on average per annum is going to be about 5 billion euros. In 2030, that'll probably get to 7 billion euros. So that's very, very significant. And it's for two reasons. Obviously, first and foremost, it's what we're getting from Novo Nordisk. But also, the investment portfolio itself is growing. As you saw, the investment portfolio contributed quite nicely this year. So if that continues to grow and we continue to do anywhere near what we did this year, then we're going to have a fair amount of inflows coming our way. And we need to be very focused on what I call scaling, which is how are we going to deploy that money and yet generate the same kind of returns that we've been generating over the last 5 to 10 years.
Well, exactly. I mean, there is an old saying in investment, elephants can't run. I mean, in some ways, this is almost a headache for you, this extra capital.
Yes. No, it's not easy, right? It's not easy to absorb all that capital and yet, generate the same returns. Having said that, fortunately, a big chunk of our portfolio on the life science side is in a very, very big sector. Life sciences, as you know, is a huge industry. It's one of the largest in the world. And the Catalent transaction that we announced earlier this year is actually a very good example of how you can scale. So Catalent is by far the biggest investment deal that we've done. Historically, we've deployed equity tickets of about $500 million. This is going to be an equity ticket of around 3 billion, potentially a little bit higher. So it just shows you that you can aim higher and you can do bigger deals. So what I would suspect that while Catalent itself is a bit of a one-off, I mean, that's a huge equity ticket, equity check, but certainly in the next 2 to 3 years, you will see us writing bigger checks than we have done historically.
Now, Catalent is a manufacturing business. You're selling on some of its plants to Novo Nordisk itself. Why have you structured the deal in that way?
So Novo Nordisk is very focused on its own issue, which is capacity scaling for semaglutide, otherwise known as Ozempic and Wegovy. That is the key strategic focus of Novo Nordisk. How do we supply the huge amount of demand? How do we get to as many patients as possible? They're not interested in being a service or a contract manufacturing provider to the rest of the industry. So that's where we come in. And that's why we're taking the businesses that are not of relevance to Novo Nordisk. And that happens to be an area, a business that we like. So the whole area of what I call biopharma services, whether they be contract research organizations or contract manufacturing organizations, are ones that we're very bullish on. And it goes back to the innovation thesis I was talking about. If you believe in that innovation, then the biopharma world needs those services. And that's why we're very focused on this sector. So we're quite excited about what we're taking on.
All right, very briefly, Kasim. Privately, you're a supporter of the Labour Party. You went to Keir Starmer's big event at the Oval Cricket Ground last month. What would you say to people, and there are still some in the city, who are a bit nervous about a Labour government?
Well, look, I mean, everybody makes up their own mind, and I don't want to talk too much about my own politics, but what I've heard and seen from Labour in relation to business is comforting. I think this is a party that has been very clear that working in partnership with business is the way to resolve some of the long-term structural issues facing this country. And everything I've seen from them and everything I've heard them say points to wanting to work with business in the right way. And the conference at the Oval is just one example of many successful interactions with business. So I certainly have no qualms or concerns about the implications of a Labour government for business, and I would encourage others to take a close look.
OK. Good to see you again this afternoon.
Great to see you. Thank you, Ian.
Some other business news stories for you now. And consumer price inflation in the United States came in higher than expected in February, dampening hopes that the US Federal Reserve will begin cutting interest rates in the first half of this year. Consumer price inflation in February was up 3.2% on the same month last year. That was higher than Wall Street had been expecting, 3.1%. Meanwhile, core inflation, the measure most closely watched by the Fed, was up 3.8% year-on-year, compared with the 3.7% expected. The increase was due largely to higher petrol and housing costs. Persimmon said today it will build more homes this year than it did in 2023, but warned it is expecting another challenging year. The UK's fourth largest house builder by stock market value said greater competition in the mortgage market and wage growth had contributed to improved affordability, but added that with interest rates expected to remain at current levels and a general election on the horizon, market conditions were expected to remain subdued throughout 2024. Well, pre-tax profits for 2023 came in at £351.8 million. That was down 52% on 2022, as Persimmon completed 33% fewer homes. The shares are currently off by 3.25%. Domino's Pizza says it expects to open more than 70 new stores this year as part of an eventual target of having more than 1,600 stores across the UK and Ireland by 2028 and more than 2,000 by 2033. Well, the company was reporting an underlying pre-tax profit of £99 million for the year to Christmas Eve, up £200,000 on the previous 12 months. Domino's also announced it is paying £62 million to take full control of Shorecal, the largest Domino's franchise business operating in the Republic of Ireland and Northern Ireland. Now, the infrastructure and construction services group Costain said today it expects to see significant growth in demand from the water and energy sectors over the next few years, as investment in both is stepped up. Costain, which employs more than 3,500 people, was reporting a pre-tax profit for 2023 of £30.9 million. That was down 6% on the previous year. The year also saw it resume dividend payments for the first time since the pandemic. Well, joining me now, I'm pleased to say, is Alex Vaughan. He's Chief Executive of Costain. Alex, welcome to you. The next regulatory period in water doesn't begin until next year. Are you already starting to see extra capital being deployed?
Yeah, we're already, and thanks very much for the opportunity. Look, we're already seeing investment programmes for AMP7, which is the current regulatory process, increasing as the water companies want to get ahead and deliver the environmental improvements that I think we can all see are necessary. And that steps up for a significant investment programme all the way through AMP8.
And you'll be looking to work with all of the major water companies across?
Yeah, we're currently working with 8 water companies and we're looking to expand that. And I think we also provide a broad range of services. So, you know, we help Ofwat innovate around things like turning wastewater to hydrogen, but also deliver major programmes, optimise the performance of existing assets and help transform maintenance programmes. So, yeah, quite a range of services in that marketplace.
Now, this is quite a timely day to be speaking to you because the UK government's today given the green light for the building of more gas-fired power stations up and down the land. Is that going to be a big opportunity for you?
Well, that particular opportunity won't be a big opportunity for us, but I think we're playing a very proactive role in the whole energy transition space. We're working with BP on the Teesside carbon capture industrial, and you know we're hoping to be able to announce the further progress on that because that's going to be a real game changer for green industrial growth for the UK. So yeah, we're a very active part of that.
And what about small modular reactors?
Yeah, no, we're working with a number of the consortia looking, and as we go through the bidding process, we'd hope that we'd be one of the successful people. You know, and energy presents huge opportunities, you know, and water in the market to really transform security of energy and move towards net zero.
Now, looking at the results today, one thing that I think might surprise one or two people is that you were up in rail, and that's obviously despite the very high-profile cancellation of the northern leg of HS2.
Yeah, look, I mean, we're very proud with the momentum that we've built over the last 2 years. And if we look at our results on an underlying basis, operating profits are up by 10.5% at 40 million. Our margins have now increased to 3%. And our cash position has grown to 164 million, which is up 30%. So a strong set of results. And look, our growth in rail, transportation, and specifically water, energy, and defence has been really good for us as a business.
Are you still fairly optimistic that the final leg of HS2 from Old Oak Common to London Euston will go ahead?
Yeah, we're pretty optimistic in the conversations that we've been had that HS2 will complete, and we're delivering that project well, as we are. Some of the other big strategic infrastructure that the UK needs. We're building a pipeline that takes water from Hull down to Chelmsford to serve customers in that space. So, yeah, exciting times.
One thing that jumps out, I mean, you're talking a lot about the opportunities in water and energy today, but I mean, that's only about 29% of revenues. I mean, you're still very heavily geared towards transport.
Yeah, look, and I could talk, if we look at the National Infrastructure Assessment that's been put out by the National Infrastructure Commission, it talks about significant investment in transportation, really upgrading our road networks to alleviate congestion, for us to drive further growth in rail. And we're working with a number of the airport operators, and they are investing huge money in there and upgrading their facilities to improve passenger throughflow as well. So, yeah, absolutely, transportation will be a growing part of our business as well, as will defence and nuclear energy.
Yeah, exciting times. Alex, got to leave it there, I'm afraid. Great to see you this afternoon. Thank you.
Thank you.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Tuesday. Don't go away.
I'm Stuart Ramsey, and I'm Sky's chief correspondent.
It's really desperate. That is actually the sort of pretty much hopeless column. We saw snatch squads going in, grabbing people.
You either live and recover, or you die.
Okay, so that's like a war.
That's the war.
We help you understand the world with us. Over the past 24 hours, the soldiers have been attacked on a number of occasions.
It's really sending a clear message that Venezuela is eager for change.
Take you to the heart of stories that shape our world. They were convinced the United States would become hooked. Well, we're right.
An enormous explosion has just come down.
It's not out of control, but they've withdrawn. It's so hot.
Emirates Premium Economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better.
Well, the US dollar has rallied on foreign exchange markets after the stronger than expected US inflation data. Here's where we are at present. Sterling off 0.25% against the dollar. The euro off 0.1% against the dollar. Sterling also having a bit of an off day against the euro there as well, off 0.1%. On the equity markets, this is how European stocks have finished this afternoon, all of them in positive territory. Talking points today, very interesting situation brewing in the Netherlands. The chip equipment maker ASML, which is the country's biggest company, up 1.5% in Amsterdam on reports it may relist elsewhere amid concerns over higher taxes. One to watch that situation there. Here in London, the FTSE 100 has finished up 1% in a broad-based rally. The leading blue-chip gainers this afternoon are stocks with exposure to Hong Kong, Prudential, Standard Chartered and HSBC, all higher after a 3% rise overnight in the Hang Seng. The leading blue-chip gainer, though, today is Entain, which is up 3.5% on a report from my colleague Mark Kleinman that it's appointed bankers to advise on a sale of Party Poker. To the downside, well, Persimmon has finished some 3.25% lower. Barratt Developments, as you can see on the screen there, off nearly 0.9% in sympathy. Outside the FTSE 100, CVS Group is down by some 24% and Pets at Home some 3.5% on the CMA investigation into the veterinary sector, while the leading mid-cap gainer today is TP ICAP, the interdealer broker, up nearly 10.5% on confirmation it may sell its data units. Over on Wall Street, stocks are trading to the upside despite the inflation data. The cloud services group Oracle is ahead by 11% on better than expected quarterly results, but Southwest Airlines is off nearly 14% after cutting its forecasts for the number of aircraft it expects to receive this year from Boeing. As for the oil price, well, that has rallied on news of increased Chinese crude imports during the first 2 months of the year. Barrel of Brent crude currently changing hands at $82.52 a barrel. That's up a little under 0.5%. Well, joining me this afternoon is Dr. Jimmy Mushateri. He's senior equity analyst at Investec Wealth and Investment. Jimmy, great to see you again. US inflation, bit of a hot number. How come Wall Street is higher?
Well, I think the main impact of that number is that it pushes out the market's expectations for the first Fed rate cut. Pre the number, there was a 97% chance baked into a June rate cut. But because this was a tenth, it wasn't really a lot, a 0.1% ahead of consensus. That just puts a pause on the market, and that pushes it perhaps into the second half of the year. And then that effectively brings back the 2023 playbook of we want to invest in growth companies that are cash generating, i.e. a very narrow market.
Yeah, I mean, it's quite something. I mean, you wonder almost why the Fed is... People are talking about rate cuts, looking at the, the clip at which the economy is growing at. I mean, the jobs figures last week.
Yes, 100%. The economy has proved to be much more resilient than what everyone thought. Indeed, all the forecasts of a recession in the US have proved to be untrue, and the data still continues to point to a very strong economy in the US.
Yeah. Now, closer to home, a lot of corporate results to digest today. What caught your eye?
A number of things. So you mentioned Entain. That was really interesting. The Party Poker came with the acquisition of Between in 2015. If they manage to sell that, I've heard numbers around 150 million. That's a nice cash injection. Yeah. We saw TP ICAP as well, another capital market transaction. But in TP ICAP's case, is not looking to sell the business, is looking to do a minority stake via an IPO. And again, this speaks to increased confidence in the market. We're getting to see more deals coming off the line, more capital market transactions happening. And then you mentioned Persimmon. That's really interesting. It's surprising, the results themselves were mixed. They issued a cautious outlook. But when we listened to the conference call, it was much more positive. The management, for example, said they are seeing 5% higher average selling price in its forward order book. So while it might be bad news for most of us that house prices continue to rise, it's very good for Persimmon. Yeah,
very good point there. I thought Domino's were quite upbeat. I mean, the share price has finished off today, but I mean, it's quite an expansionary story.
It is. It's a bit of a conundrum because the results I would characterize as solid. They increased their dividend by 5%. Again, another show of confidence. It upgraded its long-term targets. Again, another tick in the positive box. And yet the shares were down. The only thing we saw that could perhaps explain that is they said they were going to buy out the 85% stake they didn't own in a franchisee in Ireland. But other than that, Domino's Pizza continues to be a strong business, asset-light, cash-generating, dividend-paying, and exchanging hands at a moderate valuation.
Yes. Do you ever? You don't look like you're a man who consumes many Domino's.
No,
Slender frame.
You're very kind, Ian.
Well, and you're a doctor as well.
Indeed, indeed. I think I try to practice what I preach.
All right, Jimmy, got to leave it there. Great to see us ever this afternoon. Thank you. That's it from me. I did have a Domino's last week, actually. I'm still feeling the impact of it, I think. I'm back at 11:30 tomorrow morning, the next edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up next, it's Mark Austin with the News Hour. Thanks for joining me today. Cheerio.